Welcome back everyone. Today we are going to look into what Warren Buffett said at Berkshire Hathaway 2020 shareholders meeting. Warren Buffett is one of the most closely followed investor in the world. He is very successful and has been delivering for past several years. Every year Berkshire Hathaway shareholders get an opportunity to meet him and discuss the questions that they have about investing, trading, etc. This year it was very difficult due to corona epidemic. Berkshire annual shareholder meeting has to settle with a live stream remote event. Despite not being able to invite shareholder to join him in person, Buffett nevertheless wanted to be sure to keep the lines of communication with investors open. That is a great move, my friends, because each and every person at this time has to take the responsibility that he has. Berkshire chairman and CEO had plenty of things to say and answering questions compiled by well-known financial journalists and also addressing some of the most important issues that Buffett's followers had in their mind lately. So I have compiled several things and it is a summary of his meeting. With that, let's start the video. The first thing that he made clear is that Buffett still believes in stock, and that also for long haul. Buffett has always believed in America and nothing about corona epidemic has changed his view on that. He gave an extended history lesson about the nation where he pointed towards the challenges the country has faced in past and how it always jumps back and overcomes them properly. Buffett has no illusion that he can predict where the market will go tomorrow or where the stocks are going tomorrow or next week or next month. But he thinks America in 2020 is in better shape than it was in earlier time of history. He is obviously pointing towards the recession in 2008. He believes that investors who put money in stocks for long run will be amply rewarded, and it can be clearly seen. The second thing that he made very clear was, if you don't want to buy individual stock, and S&P 500 index is still fine. Buffett has famously said that he suggests that a perfect good way for an investor to participate in gradual rise of the stock market over the time is to invest in S&P 500 index fund. With low expenses, index funds can give investor exposure to a wide swath of the businesses that has been responsible for America's economic success over decades. Indeed, investing in an index fund isn't just a bet on the success of America. With so many multinational companies in S&P 500, index funds give you the ownership in these companies that are finding success all across the globe. And this was one of the major things to take out from this, that if you are a passive investor and you don't have time, you can invest directly in S&P 500 and you can make your wealth grow faster. He also pointed towards financial advisory. Buffett doesn't want you to pay for financial advice that you don't need. On a related topic, one reason Buffett advises index fund is that they are inexpensive. Too many people pay large amount of money for financial advice, and Buffett is a critical of the performance that most of the financial advisors are able to achieve. Buffett believes that most salesperson in the finance industry aren't able to deliver superior result, despite in fact that these are salespeople. These are not investors, not traders. They are just trained to give you dreams and sell their product or sell their services. They are not investors. So he quotes very properly, believe their own baloney in his words. So that is very important to know, that you must learn financial advice, but you must not pay a lot of money, as there are lots of fake gurus in the market there to take your money and run away. Also, he makes a very bold and but understood opinion on the stocks and bonds. Buffett thinks bonds aren't as good as investment as stocks. Another reason Buffett likes stocks right now is that the alternative aren't very good. The US Treasury bond with 30-year maturities yield just 1.2%. 0.25%. That is very low, even less than your savings account. Berkshire itself has taken the advantage of low interest rate by borrowing money to zero interest rates. Buffett thinks America's economic tailwind will persist, but when all it takes to beat of 30 years treasuries is to match the rate of inflation, it even more of a no-brainer in the Berkshire chef view to invest in stock instead, because you can see the maturities are just 1.25% more, and the inflation is always rising 6 to 7% each and every year, and in a period of 10 years it nearly, or 20 years it nearly doubles. So that is the question we also have, and we must keep in point that please invest in stocks rather than investing on bonds. The great giant finally admits his mistake about selling airline stocks. I told many people that this was a wrong move, and it wasn't expected from such a highly educated and properly trained investor. Also, he is a long time investor, so he is the best I have seen till now living in this planet. Buffett admits the mistake about airline stocks. There has been a lot of speculation about the move that Berkshire Hathaway has recently made with its airline stock holdings. In early April, Berkshire sold substantial amount of its holding in Delta Airlines and Southwest Airlines, with disclosure necessary because Berkshire, having held it for more than 10% of the two airlines for a long period of time. At that time, it seemed as though Buffett might simply be reducing its position below 10% to avoid future complication. However, Buffett reported selling a total of 6.5 billion in the stock during April, far more than Delta and Southwest sales that has been reported, and also including shares of United Airlines and American Airlines. As well as question later, the Berkshire Hathaway CEO said that the company sold off its entire position in 4 airlines. As he explained, he decided, I made a mistake. He has initially figured that investing of 7 billion to 8 billion to buy 10% stakes in 4 biggest US airlines would give him 1 billion in underlying earnings, which seemed like a reasonable value. However, Buffett said, it turned out I was wrong about the business. Buffett didn't blame airline CEOs who managed their companies well and did a lot of things right. However, the Berkshire leader no longer feels comfortable that airlines will recover soon after this epidemic. It is possible that not nearly as many people will be flying, and it is gonna take a long period of time to recover from this epidemic. With that said, that was the complete analysis of Warren Buffett and what he said in Berkshire Hathaway 2020 shareholders meeting. That's all for today's video. I will come back in next video. Till then, be safe, stay home, invest properly, learn something about investing, and also please drop a like if you feel that this video was helpful. Thank you.